Trading 2 on 2 allows people to start investing with as little as £1. But that begs the question, why would anyone want to do that? Most people feel like investing requires putting a lot of money in to get a lot of money back. So how could investing £1 benefit you in any real way? This is where we come in, with our strange desire to crunch numbers and run experiments that the world would probably be no different without. We decided to take the approach of investing just £1 every single day and see how far that would take us. What sort of return would that generate? Well, let's take a look. First off, we'll be basing all of our calculations on an average return of 8% a year, and this is based on a long-term average of global index funds. Some indexes, like the S&P 500, have seen larger historical returns of around 10% per year, while other indexes return less depending on your portfolio allocations, time in the market, and more. And an important disclaimer, past performance is not a reliable indicator of future results, and this is just an experiment, not financial advice. You can lose money when you invest. With our parameters set, hold on to your seat as these figures are going to blow you away. If we invested £1 every single day for 30 days, with that return of 8% a year, come the end of the month, we'd have a whopping £30 and 10p. For all of you who doubted the effectiveness of investing just £1 per day, well, you were right. If we only look at a 1 month period at least. But 1 month isn't really the long-term timeline that most passive investors are looking for. So what if we expanded this experiment from a month to a year? Given that we only had 10p in returns over 1 month, you might be thinking to yourself, well, quick maths, that's an extra £1.20 a year. And this is where you'd be wrong. If I invested £1 a day for a whole year, based on that 8% return on investment, I'd actually have made a return of £14.95. Again, not that impressive, but something interesting is starting to happen here. £14.95 is nearly 150 times the amount of our 1 month profit. So there's a snowball effect that's starting to take shape. But how far could this snowball take us? This snowball effect is what's commonly referred to as compound interest, or in the case of investing, it's just compounding, or compounding value, because investors in stocks and shares don't get paid interest like when money is held in a bank, though you might get paid dividends. Compounding is the process in which your returns accelerate over time, because you're earning interest on your interest. Okay, I know I just said there's no interest, but it's just the easiest way to explain things. You're earning value on your value. It doesn't quite hit the same. The longer we invest our money for, the more opportunity we have to benefit from compounding. In our experiments so far, we've already seen how compounding can start to add up as time goes on. But let's see what happens if we look at a real long-term investing timeline, rather than just 1 year. What would our £1 per day investment look like after 30 years? And just to make things more interesting, we're actually going to increase our £1 daily investment by a tiny amount each year. But wait, isn't that changing the whole experiment? Well, no, not really. We're going to increase the amount we deposit by just 3% each year, and this is to roughly cover the cost of inflation. So in 1 year, we'll still invest £1 per day, then in year 2, we'll invest 3% more than this, so £1 and 3p per day, and this small increase will continue as time goes on. We did this because £1 won't be worth anywhere near as much in 30 years, or even 10 years as it is now. I mean, just look at the price of Freddos. There was once a time where you could buy 20 Freddos for £1. Now you'd be lucky to get 3. Because inflation eats into the value of our money over time, we'll be investing the real world value of £1 as time goes on. So if we were to invest for 30 years, the calculator now says that we'd have gained £43,920.27 in our investment portfolio. Now, you're probably going to take that figure one of two ways. You might be pleasantly shocked by the overall results. In this experiment, we would have ended up investing a total of £17,366 and achieved a total future value of £61,287. Or you could see that as a very low amount and be infuriated that investing isn't going to make you a millionaire over a 30-year period, let alone overnight as you really want it to. But which camp is the right way to feel? Well, both are right, kind of. £44,000 in profit? I think that's quite impressive considering the small scale that we were operating on. But yes, this doesn't make you rich either. And even with larger amounts, investing should never be considered a get-rich-quick scheme. For the casual investor, investing is more about trying to make your money work for you, hoping to achieve a better return than a bank would provide, and avoiding inflation eating into your cash value like it's an overpriced Freddo. If we could all achieve the same average returns as the stock markets have seen in the past, which there's no guarantee of whatsoever to be clear, investing would be more like a get-rich really, really slowly scheme. But that's not to say we couldn't see some significant returns if we invested a slightly more substantial sum of money and results went our way. In reality, most people getting into investing have more than £1 per day that they're looking to put away. So what if we wanted to ramp it up a notch from £1 per day, or £30 a month, to a still fairly reasonable £150 a month, or £5 per day? Based on the same numbers we used previously, including these small annual increases, we'd have seen a total return of £219,601.34. Even in 30 years' time, that would buy you a whole load of these delicious chocolate amphibians. And if we could achieve a 10% annual return instead of 8%, that profit would shoot up by nearly £145,000. If you invest with Trading 212, there are actually a whole load of features that most people don't know about. I've put a video on screen now that breaks down 20 tips and tricks you need to know when using their platform.